Losing money on the stock market is one of the main factors that prevents people from even investing in the first place. So today I'm going to share with you some tips and tricks on how to avoid losing money when investing in the stock market. How's it going, guys? Ryan here with another stock market video, and today we're talking about how you can avoid losing money on the stock market. And this is an incredibly large factor in reasons as to why people don't actually get into investing in the first place. They've got that fear that they're going to lose money. But before we get started, guys, please remember to like this video. It helps me out so much, and subscribe for all the latest content. And leave any comments, questions or queries down below. And in particular, I'd love to know what prevented you from getting into the stock market in the first place, if anything at all. And whether that be losing money or just the risk in general, or not understanding how to invest. And without further ado, guys, I'll get straight into the video now. So how can you as a new investor avoid losing money on the stock market? And there are a few different ways and things that I like to keep in the back of my mind when I'm investing myself. And the first one is that there are so many opportunities on the stock market constantly. And that basically means you have absolutely no reason to rush into something. So as you guys would know, there is something called FOMO, which is the fear of missing out. And if you're not in control of your emotions, FOMO is going to kick in because you think this opportunity that you've seen on the stock market is the greatest, and you rush into buying that stock without evaluating your current financial situation, without evaluating the actual stock itself, and without evaluating effectively anything to do with the price action, whether it be technicals or the fundamental analysis that the stock has currently been involved with. And effectively what this means is a few things can occur. So the first is that you could enter at a bad time from a TA perspective. Now, if you're rushing into it, you're just going to hit buy straight away and buy as many as you can because you don't want to miss the opportunity. Whereas you could wait a few days, a few weeks, and you might be able to enter at a different position. Secondly, not understanding the fundamentals. This is a huge issue when it comes to investing. Do your research. This is one of the things I absolutely preach. And if you're rushing into something, you've not done your research. You want to fully understand both the financials as well as the operational side of the business, what their plans are for future growth, what their current situation is. If they don't have capital, how do they plan to get it? All those sorts of things. Understanding even the environment that this company exists in with regards to the industry itself is incredibly important. You don't want to be caught on the tail end of a pump and dump. This will result in you losing potentially quite a lot of money just because you've rushed into these stocks. So going back to what I was referring to before, my key point number 2 is, as I mentioned, on a very consistent basis, do your research. And research consists of a variety of different elements. As I mentioned before, understanding the financial situation. Do they have cash on hand? Do they have debt? If they need money, how are they going to raise capital to do so? Operationally, what does the company do? What does the company plan to do? How's the company going to do it? What are the costs associated with doing it from both a CapEx and OpEx point of view? Then furthermore, what is the environment that this company actually exists within? So who are the competitors in the market, and what do they have compared to what your company that you're looking to invest in has? Do your peer comparisons before you do get involved. Now, moving on to point number 3, avoid social media for any form of decision making, whether that be forums, whether that be Twitter, whether that be Facebook, anything, any of those sort of trading groups, for instance, that you find on Facebook, are a terrible idea, and often they're called pump groups because what do? They pump and dump. This is something you do not want to get involved with, and a lot of new investors who are quite naive get burned from buying stocks that these people are pumping, because you get in at the top end of the price and the share price absolutely plummets, and as a result you're going to lose a lot of money and it's going to scare you off in the first place. So you don't want to be doing any of that sort of stuff by listening to random individuals. Once again, it's the same thing as I say. You'd never take a stock tip from a friend unless they're an absolute stock guru or they've made it and they're a very wealthy individual who knows a lot about the stock market and has good understanding. Don't take tips from your friends and family. Same with strangers on the internet. So these Facebook groups, forums, whatever it is, don't take tips from them and base your financial decisions on a tweet, on a post on a forum, on any of that stuff. Do your own research. And fundamentally, it comes back to understanding the stock itself. Now, this moves then through to, okay, I'm not exposed to the stock market. I'm new to the stock market. One way to actually understand how to reduce your risk when investing and how to avoid losing as much money as possible is experience. At the end of the day, the more that you're involved with the stock market and the more that you invest, the better understanding you're going to get over time. So as a result, I'd recommend you start small so that your risk is relatively low compared to the impact you could potentially have on your financial situation if you invested all your savings into the stock market. Start small. Learn, understand how the stock market works, how different companies work, how industry works. These sort of factors are going to greatly influence your ability to reduce risk and understand what you're investing in, what's going on, what different types of announcements and that sort of thing are coming out with regards to stocks that you're investing in or you're looking to invest in. So keep yourself exposed on a consistent basis over time with small positions in stocks. So make sure you're logging on, I'd say at least once a day, to read, understand, go through company announcements, that sort of thing. Log on to the stock forum, see what people are talking about. It's not all bad, but just understand everyone on these stock sites has agendas in play. But you will learn a lot from there. Go read other companies' announcements. Read books. Books are a fantastic way to learn and educate yourself and avoid being able to make mistakes and potentially losing money. Same with YouTube videos. This sort of thing that you're listening to right now is helping you get grounding and an understanding of how you can tend to improve your ability to reduce risk and avoid losing money over time. So guys, with that, I'm going to wrap up today's video. I hope you did enjoy it and got some value out of it. If you did, please remember to like the video and subscribe for more videos and investing tips just like today's. And if you do have any comments, questions or queries, leave them down below. I'm more than happy to help out and answer any of your questions that you might have. And also let me know down below as well, what are your tips for avoiding losing money and reducing your risk in the stock market? And what are those reasons, once again, what prevented you from investing in the stock market in the first place? So with that guys, I hope you have an awesome day. See you next time. Cheers.